www.tradingpub.com, www.tradingpub.com. Yeah, you should be able to click the link. The next subject, Steve's going to talk about candlesticks. All right, so we'll turn things over to Steve. And just real quick before Steve comes on, give you a little background. Last year we hosted probably over 100. We hosted probably over 100 traders that came through the trading pub, and we record all our sessions and send them out. And Steve's recording was viewed over 3,000 times. And again, you can go to our YouTube channel and you can see, I think it's probably like 3,200 now or something like that. But it was the most popular recording we had of the year. We always appreciate Steve taking time out of his day. We made him spend time on a Saturday this time. Usually we'll do these after the market. But Steve, thanks again for being for being such a good partner of the Trading Pub. And the next 50 minutes, the room is yours.
Question I need to ask is how many people have seen my presentation before? That'll give me an idea of whether how fast or how slow we go. All right, looks like about 70%, 30%, 70% haven't seen it. I asked that so I know how fast or slow to go with the details. And number one, which jokes to use again. Fortunately, candlestick signals never change, and that's what a lot of people say about my jokes. So I have to. So anyways, I've been in the investment business for over 35 years. About 25 years ago, after I'd gotten out of the brokerage business, somebody dropped candlesticks on my desk, and I figured anything as sophisticated sounding as candlesticks wasn't worth the trouble of looking at. But they kept hounding me, and just change your audience. That's right. He kept hounding me, so I finally picked it up and looked at it, and I said, well, shoot, this makes sense. And the more I looked at it, the more sense it made. And so what it boiled down to is I discovered that candlestick signals are basically put into a graphic depiction. And so when I started using candlesticks, so this was well before we had even the chat rooms on the internet. But when the financial chat rooms came on, which were nothing more than high school food fights, I would ask people, why isn't everybody using candlesticks? They work so well. And the answer was that there was too many of them and they didn't always work. So I boiled it down to that if they didn't work, we wouldn't be looking at them 400 years later. And I did come across the fact that there was 50 or 60 signals, but only 12 worked, or the 12 worked the majority of the time. Some of the other ones you never, ever saw. So with that, I'm going to have to, this is more oriented toward our using gaps with candlesticks, and that's what makes some very high profit trading that creates the signals themselves. And then you understand what happens with the gap afterwards. You get a very high probability of not only being in the right trade at the right time, but in a very strong trade at the right time. So I'm going to go through this. Don't bother to take notes because these are all recorded and will be sent to you. We're going to go so fast that you won't want to take notes. So basically, what we're going to use is the simple logic that's incorporated into the candlestick signals and incorporate that into the gaps. Now, when I first started learning candlesticks, there was nobody around to learn with. I mean, it's always easier to learn how to use these a new trading method when you get somebody around that can give you a second opinion. And unfortunately, in my case, I started candlesticks so early. The only time I was getting a second opinion is when I would go to the doctor. I'd say, "What's wrong with me?" He goes, "You're fat." I said, "Well, I think I want a second opinion." He goes, "All right, you're ugly too." So I learned when candlesticks um, were unknown. I was reading books back then that not only told you how to use the candlesticks, but they would tell you how to build the box, put a hole in the top of it, put a glass sheet over it, and then put your graphs on top of that so you can see them better. So anyways, so the things that have produced the most profits for me is using candlestick signals and gaps in conjunction. A lot of money managers say stay away from gaps because they won't. You don't know what's going on. A gap after a candlestick psychology was that created the last signal, and then it was followed by a gap. You know exactly what's going on with investor sentiment. So there's 4 basic gaps that we'll want to go through. And let's see what we got here. The first 2 show force. And that's basically if you see a gap up from a candlestick signal in the oversold area, that's going to produce a very strong price trend. We call this your best friend because you see a gap up from an oversold candlestick reversal signal, it's going to be a very strong price trend. On the opposite scale, if you're at the top of the uptrend and you see a doji followed by a gap down, that new trend is telling you exactly what's going on in investor sentiment. Investor sentiment in a doji tells you there is indecision going on. And then if you gap that down, not only does the indecision tell you that there's a change of investor sentiment, but that gap down tells you the bulls want to get out, or the bears want to get into that position very quickly. The bulls want to get out very fast. Is a 2 or 3 cents considered a gap, or must it be more? No, anything that my definition of a gap, just like the Japanese rice traders, is that it creates a window here, which means there is no trading from the previous day's trading to the new trading. There's no trading in there. It's a gap, whether it's a 1 penny or $2 gap. It's going to be it's telling you exactly what's going on as far as going the opposite direction. Yes, Pete, and that's the edge that we're still working with. The candlestick signals are not any mathematical formulas. They are the most basic and most constant information that you're going to get in investing, and that's human emotions. Human emotions have not changed over the last 400 years, and they're not going to change over the next 400 years. Is anybody having problems seeing the slides? You might have to boot out and come back in. All right, so the other 2, what did I get to? The other 2 were exhaustion. If you see an uptrend and you see a gap, they've reached equilibrium. Where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. I used to be that person that was selling down here and wondering, why am I always selling at the bottom? Or when everything looked rosy and things were starting to gap up and I'm buying, wondering how come I could just pick the absolute top before it turned over? If you see a gap up in an oversold condition, it's time to buy aggressively. If you see a gap up in an overbought condition, it's time to start watching for sell signals. So with that gap up at the top, let me go, let's see, we might have it here. That gap up at the top basically represents exuberance. Now, you can see my charts aren't very sophisticated or have a whole lot of stuff on it. Let me go back to a chart that has all the indicators, which might be, well, it's not even that one. Okay. What I have on my charts is the blue line is the 50-day moving average. A dark red line is the 200-day moving average, and the gray line is the 50-day moving average. These are simple moving averages, and the reason we have them on our charts is because every major money manager around the world uses the simple moving averages. Now, here's what we have developed through one of my first students that came to do a private training session. This black line, we call the T line. This is the trigger line. And the trigger line is, if you see a candlestick buy signal and a close above the T line, you stay in that trend until you see a candlestick sell signal and a close below the T line. We've had John Bollinger on. We've had my late friend Dave Elliott with mobile bands. I've been using trend analysis for 30 some odd years. The most effective one that I've come across is the 8 exponential moving average. This keeps you from getting fooled out of a trade, keeps you into trades. Now, there's one caveat to this also. The further away you move from the T line, the higher the probability it's going to come back and test it. So if you see a candlestick reversal signal way above the T line, get ready to start taking profits. It's time to come out. The light gray is the 20 SMA. The black line is the 8 exponential moving average. My stochastics are 12.33. So anytime I see this uptrend, I can sleep well at night until we start seeing them gap up in the overbought condition. Again, stochastics are 12.33. Then there's the Japanese rice traders have a very simple rule. If you see a doji in the overbought condition, if it opens lower the next day, you close out the position. Whoops, gotta find the next frame here. Exhaustion, that's the exhaustion of the top. When they gap it up, makes it very simple. Now, there's other gaps, which we probably won't have time to get through, but they're gaps through important technical levels, and we can see what type of investor sentiment is going on at those levels. This is not an indecisive candle right here. This is a decisive candle. It tells us when they gap it through, everybody and their brother could see that there could be resistance at this level, and when they went through and gapped it through, that was just a very simple message to tell you they're going to take it up higher. Slow stochastics. What time frame do we use on the T line to decide cross? You don't have to use any crosses on the T line. Use the T line by itself, and let's put it this way. I was trading very well with candlestick signals. I was one of the worst investors in the world before candlestick signals came along. My profitability improved hundreds folds once I used candlesticks, and it improved dramatically better once I started putting the T line on the on my chart. The 8 exponential is the T line. All right, so that if you don't come across or come away with anything else from this session, just put the T line on your chart and see how it works. I can guarantee you that you're going to see a vast difference of when to stay in and when to get out of trades. So anytime I see this nice steady uptrend, they gap it up. Is this the absolute top? No, but it's usually going to indicate this is where the bulls and the bears are starting to find equilibrium. Candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. They work just as well on a daily, weekly, or monthly chart as they do on a 1-minute, 3-minute, 10-minute chart. I used to trade the E-minis off the 1-minute, 3-minute, 10-minute chart. I've got long-term accounts that I trade for that we use a combination of the daily, weekly, and monthly charts. I'm a swing trader myself, so I'm usually using a daily chart, and if I see things getting exuberant on the daily chart, then I flip down to my 10-minute chart and my 5-minute chart. All right, let me make sure. Now, if you see a gap up, start looking to take profits. If you see a gap back down, this signal tells you that they have definitely changed their investor sentiment. That's called an abandoned baby. That's one of your strongest reversals. So if you're watching the trade and it gaps up, and notice in the overbought area, get ready to take profits. On the other side, if you see a doji or any candlestick signal at the top, and they gap it down, that tells you this indecision is followed by a strong decision. Not only do you want to be out of this trade, but you probably want to be going short very quickly. Notice we had a gap up doji. The next day they did not open it lower. Then we had another doji, which was a doji harami, which is another signal, one of the major signals. Then they gapped it down. That was the time to get out of this trade. Now, my biggest problem when I was pre-candlesticks was, boy, I'm going to make a fortune. I'm going to make a fortune. I'm buying new golf clubs. I'm buying a new car, adding on to the house. And then I see a sell signal. And I'm afraid to sell because what if I sold and this just kept right on going and making me look stupid? Boy, I sure don't want to look stupid. Now I know that anytime I see a sell signal, the probability. What's the worst case scenario? It comes back to a support level like the T line, and we see buy signals. I can always buy back. I don't necessarily care about making every single dollar from the bottom to the top. I just want to know that every time I'm in that trade, I'm in with the probabilities I'm going to make money. What doji means? Doji is a where it opens and closes right about at the same level. Heikin-Ashi, I help people do some development of that. Heikin-Ashi is still a vanilla down trend analysis. It won't come anywhere close to the effectiveness of the T-line. So like an IBM, notice that IBM has used the T-line for support. As soon as you see a doji gap down, that tells you there's a dramatic change of investor sentiment. I tell people this is not rocket science. All you have to do is be able to see, and you can analyze candlestick analysis. It's like the old couple that are getting ready for bed, and she's standing there in front of the mirror naked and said, look at me. My face is wrinkly, my breasts are sagging, my arms are scrawny, my butt's spindly, my legs are thin. She turned around to her husband and says, is there something you can say about my body that would make me feel good? He goes, well, your eyesight's still pretty good. So as long as you can see, you can understand what's going on in investor sentiment. I know, I just haven't had time to come up with a new joke. But notice when this gapped up, it was time to look for sell signals. When it gapped down, it was time to go short. There's your abandoned baby. Where do most people buy? You can start seeing the exuberance coming into this trend. They gap it up, gap it back down. That's your strongest reversal, one of your strongest reversals. Anytime I see dojis in the overbought area, especially when you're that far away from the T-line, it's time to take profits. The probabilities are that they're going to take it down to the T-line. If they bounce it back up, you can always buy back. That tells you the T-line is still acting as support. If they go through, you stay short. Gap up, sell signal, gap down, it's time to go short. I just want to make sure I don't run out of time here. Can you explain how you set up your stochastics? Just 1233. When I was learning how to use candlesticks, what I wanted to find out was if this was all common sense built into a graphic depiction, then the common sense says I should see the bottom of the trend where the stochastics are at the bottom. or I should see the top of a trend that's not the greatest one to use, but I should see a top of the trend uh, uh, when the stochastics are at the top. So I just tweaked it just by going back through, and 1233 may not be the most perfect one, but I've been using it for 25 years. I'm not interested where the exact is. I want to know that if I see a candlestick buy signal in the oversold area, that I know that my probabilities are extremely strong that we're going to start for an uptrend. Yes, and I mean, you can tweak it around with it. I mean, it might be 13.15, it might be 14.22, something might even be better, but I'm just looking for where is the trading happening. The stochastics are not my buy indicator. The stochastics are only showing me where I am in the trend. The signal is my buy indicator or my sell indicator. All right, so again, where do most people sell? They panic sell at the bottom. When they gap it down and you see a candlestick buy signal, that's the time to start buying. One of the factors that I've discovered with candlesticks is that if you see a gap down, especially in some of the big quality stocks like IBM, Dell, Procter & Gamble, whoever you're following on some of the big ones, that somewhere between 4 and 16 weeks, they'll bring it right back up and fill that gap. So if they gap this down 15, 20%, you know, over 4 to 16 weeks, they're bringing back IBM to that level. That compounds very quickly, staying in big quality names. Do you do trend analysis? Yes. If you understand what is in each signal, trend analysis becomes very simple. And that's a whole different story. That's one of the sessions we do on our website. Let me do a 30-second commercial here since we're not doing commercials. My website is thecandlestickforum.com. We've got a chat room that's open every day with about 200 people in there with all levels of candlestick education. During the week, I do a Monday night session that shows people how to use candlestick signals correctly. Thursday night, we have a free session. We've got 1,300 pages of free information for our members, and we used to sell the material, but what we do now is about 2 or 3 times a month, we will have free training sessions for members on how to scan for the best trades, coming up, the most effective stop losses procedures for candlesticks, which we'll get to here in a few minutes. Effective entry and exit strategies. This is all free to members, yes. That comes under all one price. Let's see. So when the gap down is a sell signal, when is it a buy signal? A gap down from in the overbought condition is a sell signal. A gap down in the oversold condition tells you to start watching for a buy signal. So if I see a gap down and a hammer doji, notice where this one happened, right on the 200-day moving average. I'm starting to look for buy signals. What's my buy confirmation? I want to see that the bulls have stepped in. Now, I'll use this as an illustration. After being in the business for 35 years, you hear every money manager tell you to cut your losses short and let your profits run. Except in 35 years, I've never heard a money manager tell you how you cut your losses short and let your profits run. Candlestick signals do it very effectively, because if the result should be that if they open this positive, we should be in an uptrend. Where should that positive open not go? It should not come back down through the head of that signal that told us there was going to be a reversal. If that's the case, you get right back out of the signal. Most of the, I say most, out of the 12 major signals, you probably have about 4 of them that need a confirmation, and 2 on each side that don't need confirmation. And I had somebody ask me the other day, that is none. If I see a candlestick buy signal, notice what we had in this chart. Gap down in the oversold condition. The next day we had a bullish harami, which is one of the 12 major signals. That told us the selling had stopped. What do we need to confirm that you're in an uptrend? Next day they gap it open to the upside. You don't need any further confirmation. That is the confirmation. That's why Japanese signals get you in early enough that you're making a good profit off the trade. Number two, they're getting you in early enough that if this opened positive, where would the Japanese rice traders say you want to be back out? Well, if this candle right here, this bullish harami, told us that this is where the bulls are taking control, they said that then you should not see this close halfway down that candle. If the bears can close it back down that halfway point, that means the bears are still in control. Let's see. Gap down, oversold, start watching for buy signals. I can see I gotta look at my little timer here. This is the nice thing about the visual aspects of candlestick analysis. What did this signal tell us after they gapped this down huge? It told us when it started turning green that immediately the bulls were stepping in. That makes for a good day trade where you can see immediately what direction the investor sentiment is doing after the open. A gap down in the oversold area, a gap back up over here. What do you have? You have an island reversal. This tells you it's time to be buying. I'm not ignoring anybody's questions. Let me see if I can get through all this, then I will come back and take questions as fast as we can answer them. Here's your best friend. A signal in the oversold area followed by a gap up. Anytime I see this, I'm buying immediately. A doji in the oversold area, notice how far away it is from the T-line. Start buying. A bullish engulfing, followed by a gap up. That first day, it might not have closed up there, so what do you need to see the next day? You better see it open and trade positive. However, the further away you are from the T-line, you want to be buying immediately because what's your worst case scenario? That it goes up to the T-line. If it fails, you're back out. You're probably out with a small profit. But if you can be out of your bad trades with a small profit, that just helps your good trades to create a much better return for the portfolio. Or if you see a gap up through what we know is a common price pattern. This is an uptrend, failed right here at the 200, or at this resistance level. Pulls back. This is what we call a J-hook pattern. We know it did. There are about 8 price patterns associated with candlestick analysis that we use for 2 advantages. Number one, because you can recognize them and you know exactly what they should be doing at breakout levels. And number two, if you're in an uptrend and all boats are rising, you want to find the boats that are going to be rising the fastest, and that's what's going to come out of these candlestick patterns. And also, it gives you an opportunity to see what everybody else is saying about there. One thing I learned about candlestick analysis was you don't have to listen to anybody out there, any analysts, your brother-in-law, Kramer, anybody. I bought stock down here where I wouldn't have because the news would be so bad. You wonder why would you be buying down here? But I learned, being the worst investor in the world, that I was usually selling down here when the news was so bad and it would go straight up. Notice why this one should be bought. Stochastics in the oversold area, bullish engulfing signal, a close above the T-line. What do we want to see next? Well, they gap it up. What's that telling us? This resistance level is not working anymore. We're in a very strong uptrend. Where do we want to take profits? Right up here where Kramer recommended it was time to buy. They were gapping it up in an overbought condition. That tells me a completely different story. I'd rather listen to the Japanese rice traders that have not only observed these for 400 years, but became profitable. And the Japanese house that used these signals did not only become wealthy, they became legendarily wealthy, just trading one of the most simple commodities in the world, which is rice. Anytime I see this signal, here's an inverted hammer with a gap up above the T line. I'm buying. As long as it stays above the T line, you're now in an uptrend. It has an extremely high probability that if you see it gap up the next day, the bulls are coming in, the bears are getting out of the way. So I would probably say above a 90 to 95% of the time, you're going to see an uptrend. So where's your stop loss? If this opens higher, it shouldn't come back down through this level because the probabilities say we should be going this way. If it comes back down through the signal that told us there was a reversal, you close out the position immediately. There's your best friend. Where's the T-line? The doji down here, next day positive open, stochastics in the oversold area. Where's our next target? Is the T-line. If it failed here and started coming back off, we're probably still out with a profit. But the fact that we have a doji followed by a gap up and a close above the T-line, stochastics coming up, that tells us we're probably going to our next major target, which is right up here. Let's see. Where do most people sell? They're panic selling down here. The next day, everybody asks, well, where do you grab for a falling knife? That's where candlesticks come in with very clear visual capabilities to see that the bullish harami tells us the buying has started, the selling has stopped. If it opens positive the next day, you want to be a buyer. That gap up is one of your best friends. Anytime you see a doji, especially what is a very high probability situation is, if you see a bunch of flat trading, there's an inordinately high percentage of the time that flat trading will end with a doji. That's where the bulls and the bears have finally come to say they're indecisive. Then if you see them gap it one way or the other, that's where the trend's going to go. Bullish harami is when, oh, where did it go? Bullish harami is, I've lost it, is the Western terminology for an inside day. The previous day opens here, closes down here. The next day they open it above the previous day's open. They close it below the previous day's close. That tells you the selling has stopped. Trigger line is the 8 exponential moving average. Bad word. Oh, that's because you're from India. Doesn't harami in India mean pregnant woman? I'm not allowed to use that either. All right, what does harami mean in Indian? Is the gap only the opening, or does it require no intraday? You don't want to see intraday from here to the low of the next day. There's still space in here. That means they've taken it up hard. Oh, it's a curse word. Ooh. Aha, no wonder my Indian membership has dropped down to 0. Anytime you see a doji followed by a gap up, that's going to be a very strong price move. Okay. Fell down and busted your. And a gap down, especially below the T line, you stay short until you see a candlestick buy signal and a close back up above the T line. You can also analyze very simply which direction you're going, which trend you're going in. So if you see a doji and a gap down again below the T line, you can pretty well assume they aren't going up through the resistance levels. They're still taking it down. If you can see a trend channel, notice our evening star signal. What did they do before when they got down to the bottom of the trend channel? They took it back up. If they gap it down through that level, that tells you there's a change of investor sentiment. You want to stay short on that position. Gap downs are part of a kicker signal. Notice how, I think you can see this, how this was kind of a kicker signal. This was me in the old days. They had a nice strong move. I'm going to be rich. And then I wake up one morning and they've gapped it down below the previous day's open. What's the first thing I'm thinking? Boy, this bad news. I hope they bring it up one more time and let me out, and then they can take it down. What I discovered is if you see a gap down in an overbought condition, that's because the bears are coming in with force. There's only one thing you want to do: close out the position immediately. Then you want to watch to see if it's time to go short. If they're gapping it down, especially below the T line, that tells you exactly what's going on in investor sentiment. Gaps equal extra information. It tells you what's going on at resistance levels. With candlesticks, if we were coming up here and this was indecisive and it gapped through, that might be a little bit different. But the fact that they are gapping it through after a strong candle tells you there's everybody and their brother could see there was a resistance level here. They're going to be going higher. Or what's the most common thing that you know about support and resistance? If they come up through a resistance level, they're going to come back and test it for support. Here's that bullish harami right on the 50-day moving average. What's that tell you? It tells you immediately the selling has stopped. And we call our J-hook pattern. J-hook pattern is a strong move, a pullback that's indecisive. Your stochastics do not go all the way back down to the oversold level. They started back up. We know a very simple rule about the J-hook pattern. First of all, if it fails right here from buying right here, all right, you're going to make a little bit of a profit. If it goes through, this wave right here is going to be equivalent to this wave right here. Very effective for putting option spreads on. If you know what your top target is, it helps you increase your profitability of putting a spread on. Does the stock or the stochastics? The stock makes the J hook, but it's confirmed by the stochastics not getting back to the oversold area. Gap up through the resistance level right here. Pulls back. We're about ready to go into a J hook pattern. Notice how it's pulled back. Now, I'll just fill up some more information here. There's one simple rule of a doji, and that is they will move the trend in the direction of how they open after a doji. So if you see a doji sitting right on a resistance level, makes it very easy. If they open it lower, that told you they're failing here. Get out of the position. If it opens positive, that tells you they're going positive, and that tells you they're breaking out. You're now in wave 3. Some very highly valuable information built into each one of the signals. The strongest of all your signals is the kicker signal. Notice how it opened here, closed here. The next day they opened at or above the previous day's open and went this way. That tells you you're going much higher. The investor sentiment has kicked in the opposite direction. So we went long on DNDN the other day. Why? This is what we call a fry pan bottom. Notice how when they broke out of the fry pan bottom, they gapped up through here. Almost went up to the first resistance level, pulled back, and then did a kicker signal. So we've got a fry pan bottom that usually results in a breakout, and they're using a kicker signal, which is the strongest candlestick signal to break out. This one should have a very strong uptrend. Candlestick work on anything that you're trading. I see a question of whether you're trading commodities, currencies, Forex. You should say currency, Forex. Stocks, bonds, tulip bulbs, baseball cards. Anything that has fear and greed in it is going to be depicted in the candlestick charts. We bought this the other day. Why? Notice all the series of dojis down here. If one doji means indecision, a series of dojis means greater indecision. Then they gap it up through the T-line, number one. Stochastics coming up, number two. Number three, they're going to be doing an island reversal. Number four, if they trade it, if they confirm this signal, they're breaking out through this downtrend. This is LTD, and they were trading up a little bit on Friday. But when they start gapping it up, that's basically telling you they want to get back in with lots of force. Where's the next target? Right to fill the gap up here. This is not rocket science. This is just merely common sense put into a graphic depiction. An island reversal is you can draw a circle around all this trading between this gap and this gap. They've taken it down, they gapped it down, now they've gapped it up, you can draw a circle around it. And this is all just kind of simple analysis. So if you're long this stock, what's this tell us? Notice the exuberance that's starting to come into the stock. Number one. Number two, look how far away it's moving from the T-line. Number three, notice the gap up in the overbought area. This is telling us start watching for a sell signal. There's your best friend right there, a doji followed by a gap up. That's what your results are expected to be. The nice thing about candlesticks is if you follow what they're doing or telling you, you're going to be way ahead of everybody else. Because these aren't signals that just work arbitrarily. This is investor sentiment that is occurring time after time, year after year, decade after decade, century after century. Investor sentiment doesn't change over the time frame. I think Fausto's on later this afternoon, isn't he? Doji followed by a gap down. I told you the downtrend's still in progress. That's it. We did this one. We did that one. All right. So we could also use some of the signals to tell us, where's our best friends? The gap ups. We can also use some of the signals, like this case, where the gap up to tell us we're going to have a good, strong uptrend. Or, in this case, this is a very strong pattern, a slow rounding bottom, gap up, strong move. Or a kicker signal. Gap down tells you there's going to be a strong move. Here's what we call the classic. This is a fry pan bottom. And what's the first thing that comes out of a fry pan bottom? A very strong price move. Well, what happens after a strong price move? You're going to get some profit taking. They pull it back and they start back up. Now we have a J-hook pattern. So we can anticipate a J-hook pattern by coming out of a fry pan bottom, taking profits, and getting right back in for the next price move. Okay, I'll get back to everything. Here's another one where the bottom starts out, gap up. We did this one not too long ago. Notice the little rounding bottom here. We were buying the calls just as it gapped up and sold out a few days later at made 3-4 times our money. Again, we're just looking for the things that reoccur time after time in investor sentiment. And do you hit some bad trades? Yes. For every time you hit a bad trade, though, you're going to hit 4 or 5 equally good trades to make up for it. Essentially, it just puts you in situations that have worked time after time. Slow rounding bottom, gap up results. Slow rounding bottom. These are trades we have actually done here in the recent past, and that's why I remember them. Gap up results. Again, they're just putting the probabilities of being in the right place at the right time. This was January 8th week. Slow rounding bottom, gap up. Sold half the position on the close because that's where the shorts were being squeezed. The next day, they started trading it down, which told us we'd probably have a bullish harami. Sold the other half right there. Again, not trying to make every dollar, but I'm trying to find that big fat part in between. All right, so essentially gaps and candlesticks is just a huge profitable combination. Now, the biggest problem I have found about people using candlesticks was most of them didn't understand it. A lot of people have candlesticks on their charts. They just don't understand how to use them. And let's see, how many minutes? We only got 6 minutes. So what I'm going to do is I told Morgan I've been giving people the opportunity to learn candlesticks with an offer they can't refuse. We have what we call the 5 for 15. That is 5 of our education packages that shows you how to use the gaps, how to use the moving averages, your entry and exit strategies that improve your probabilities of being in the right trade at the right time or taking profits at the right time. Was also identifying where your profit targets are. So for 15 bucks, you get this package, and we usually market for 540 bucks. But wait, there's more. I like to say that because I stay up late and watch those commercials. We also have our website, and I told you about the different aspects of it. That for 15 bucks, you get free access to our website for 30 days. This is the perfect way that if you're going through candlesticks and you're really interested in learning them, that day, and there's hundreds of people there to converse with it. Somebody's there is doing the same type of trading you are. I put out 2 or 3 stock picks every day, not so that people have stock picks, but so that you see in the video why those picks are being made. And I kind of equated to that if you just tell people what to do, they never learn anything. If you teach people how to do it, they've got something they can use for the rest of their life. So if you're telling somebody what to do, most people don't understand what they're using it for. It's like the cop standing on the corner and he sees this car weaving down the street, blows his whistle, pulls the guy over, and the guy's drunk, but he looks in the back seat and there's a penguin sitting there. And he goes, "What are you doing with a penguin in your back seat?" He goes, "Oh, I found him out on the street and I don't know what to do with him." The cop said, "Well, take him to the zoo." And the drunk said, "Oh, that's a good idea. I didn't think of that." Well, the next day, the cop's standing there on the corner, and here comes this drunk weaving down the street again. He blows his whistle, pulls him over. He walks up to his window. He sees the penguin in the back seat. He said, "I thought I told you to take the penguin to the zoo." And he goes, "I did. He liked it so much. Today we're going to a baseball game." So if you don't understand what the reason is for doing something, you're not going to learn anything. So anyways, with that, if there were questions that I didn't get to, again, for 15 bucks, you can't lose. And after 30 days of being on our website with the amount of information that's being passed back and forth, I'll give you 15 bucks back if it wasn't worth it. But we've never had anybody take that up. So if you had questions that I went past, go ahead and ask them here. We've got 2.5 minutes, 3 minutes left. See the link for new jokes? I've been using this with TC 2000 scans for years. Simple. Okay, thank you, Terry. Let's see. Everything's scrolling past. What number between 1 and users? You can use, just test it. I mean, you can easily test the stochastics on your charts just by putting different numbers in. Again, just start off with 1233. And if that doesn't work for you, tweak it a little bit. Go to 1415 or 1222 or something. Regarding the T-line, what number between 0 and 1 used for smoothing? Let's see. If you're having problems setting it, just email me, steve@candlestickforum.com, and I'll go through it. Depends on which software you're using. And I post a link in the chat. Yeah, I think we've done that a couple times. Here it comes again. Can your gap strategy be used for Forex? No. Remember, Forex is continuous. So it's only going to work for a weekend, unless you find some. Well, the only time that closes for 45 minutes, a couple times a day, just to refresh. Do you not consider the night session? We do night sessions probably about 3 times a week on average. The Monday night for members, usually a Tuesday night will be instruction night. Will either be a guest speaker or me. And then we do some trainings on Saturdays. We'll probably be opening up on Sunday nights also to get ready for the weekend. Yes, the DVDs are downloadable, so you should be getting them immediately. Did we get a kicker signal on the Russell yesterday? I will have to go. Uh-oh, we're getting close to time. Whoops, did I run out of time? All right. Anyways, come join us for 15 bucks. You'll get more than your money's worth. And I think once you find out how effective candlesticks are, no matter what type of trading program you're doing right now, if you overlay candlesticks on top of it, it's going to make it much more clear to understand what your trends are doing. So with that, Morgan, thank you very much for the invite. Thank you, everybody, for getting up early this morning and listening. Hopefully we'll see you all in the chat rooms.
All right, great. Thank you, Steve. Excellent job as usual. I told you guys you'd enjoy it, and Steve did give the disclaimer. He'd throw out some of his world famous or soon to be famous jokes. Dan, if the link's not working, there's probably just a lot of people trying to click it. Try clicking it again, and that will work. So, Steve, again, excellent job. Let me ask you guys a question real quick. Have you guys enjoyed the education so far? What do you think about the class so far? Feel smarter already? There you go. Okay, good. It's good to see. It's good to see happy people. That's definitely what we're looking for. Our next speaker is actually going to be Charlie Finn. Charlie Finn is a student of DTI that came through the DTI course, became a 5-level student, and